welcome to IIFL Markets. Result season is just around the corner. Several large and mid-sized IT companies are likely to announce their results over the next few days. So what do we expect from the IT sector in Q4? Here is a summary of the expectations of IIFL Securities. IT companies are likely to witness continued growth momentum amid healthy demand for their services. Dollar revenue growth for IT companies in IIFL Securities universe is pegged at 4.4% sequentially and 9% on a YOY basis. EBIT margins, though, are likely to contract by 120 basis points sequentially. This is on the back of wage hikes in most companies and one-time bonus in case of some. On the other hand, continued benefits from lower travel expenses, subcontracting, favorable cross-currency, and other SGA costs will support the margins. Let us look at what is expected from the biggies in this quarter. Let's start with TCS. The business momentum is expected to be robust at TCS, largely because of the ramp-up of large deals. The BFSI vertical is likely to be strong owing to ramp-up of large deals in the Postbank and Prudential Pramerica accounts. Tech spends around customer experience, employee experience, and business resilience are likely to drive demand. Margins will be aided by healthy operating leverage. Important things to watch out for in management commentary would be the commentary on demand environment across verticals, nature of transformation initiatives undertaken by clients, outlook on hiring and attrition trends in the industry, and quantum of wage hikes that will kick in from first quarter of FY22. Next up is Infosys. For Infosys, the deal wins are continuing to drive its performance. Margins will be hit due to the full impact of wage hikes. Important management commentary, of course, will be on the full year management guidance. We expect the revenue guidance on a YOY basis for constant currency terms to be 12 to 14% in FY22 and EBIT margins of 23 to 24%. Updates on deal pipeline and pace of deal conversion will be keenly watched out for. The possibility, timing, and quantum of wage hikes in FY22 will be another factor to look out for. Ramp-up of the Daimler deal and broad trends seen in deal pricing and offshoring would be another factor that we will be looking out for in management commentary. Hcl Technologies. Hcl Technologies is likely to record highest ever bookings in the quarter. It has a strong deal pipeline already in place. Its margins, though, will be impacted significantly due to a partial wage hikes and also a one-time special bonus, which on its own will impact the margins by around 350 basis points. Important management commentary to watch out will be, of course, guidance for the full year. We expect them to guide for revenue growth of 10 to 12% in FY22. Outlook on growth and margin trajectory for products in Mode 3 business, traction in digital foundation, which is the erstwhile IMS business, outlook on the BFSI vertical, which has remained relatively soft for Hcl Tech, will be other factors to watch out for. Next is Wipro. In case of Wipro, the strength in consumer vertical will continue to drive revenues. Rising momentum in manufacturing and communication verticals will be another positive. The important management commentary around the guidance for the first quarter of FY22 will be watched out for. We expect it to guide for a QOQ revenue growth of 2 to 4% in the first quarter. Outlook on the BFSI vertical, quantum of deal wins and update on the deal pipeline, and details of the wage hike cycle for FY22 should be watched out for. Last but not the least is Tech Mahindra. We expect continuation of gradual recovery in the communications vertical. The enterprise segment, though, could grow a tad faster than the rest. BFSI and tech and media segments should also see healthy momentum. The margins are likely to expand for Tech Mahindra owing to focus on cost optimization measures. The important things to watch out for in management commentary include trajectory of deal wins, road ahead for the communications and enterprise segments, and margin improvement. Thanks for tuning in. If you liked this video, subscribe to IIFL Markets.